Welcome to the Economic Countdown. The events we all witnessed throughout this year have changed our perception of what's considered normal. We've gotten so used to bad news that many of us can already anticipate that what is coming ahead are even more hardships. Our optimism isn't based on future achievements anymore, but instead coming back to where we were before this whole meltdown has started. Since the beginning of the crisis, in every month and every week that passes, we've seen some part of our economy collapsing. We've experienced the damages of this crisis in our lives. We've come to expect the unexpected. Now, it feels like another major disaster might happen at any moment. Problem is, so many issues are being unfolded at once, we can't tell for sure what's going to be the pivot of the next breakdown. Waiting for the other shoe to drop, the state of the economy in America continues to rapidly deteriorate. That's what we're going to discuss in this video. As our economy continues to slump, we register more layoffs and, more concerningly, a hyperinflation in food prices that is about to spark a lot more problems in our society. So let's jump into this video. Please remember to like, comment, share, and subscribe. It seems as we reach the final stretch of 2020, the pace of economic deterioration has considerably intensified. Amid a spike in confirmed viral cases and a new round of lockdowns, U.S. business owners are getting increasingly desperate, with the effects of the restrictions and lack of revenue and financial support. Consequently, massive waves of layoffs are being recorded during this holiday season. For instance, last week the number of initial claims for unemployment benefits was the highest in 4 months. According to the latest data released, an additional 885,000 people filed for first-time unemployment benefits last week. That's up from 862,000 new claims reported in the week before and way higher than the 800,000 claims that economists have forecasted. Last week's numbers were revised up due to seasonal factors. Even before the adjustment, that week had recorded the highest level of initial claims since mid-September. Recent figures released by the Labor Department show that this was the 4th time in the past 5 weeks that the first-time claims rose from the prior week. This shows the growing problems within the U.S. job market as we approach the end of the year. It's apparent that the health crisis is still wreaking economic havoc in real time, pointed out economist Anne Elizabeth Conkle. At nearly 1.4 million, total initial claims are over 6 times higher than during the pre-outbreak era at this stage of the crisis. This upward trend shows that things are going to get even worse as winter gets closer. The current numbers show how 9 months of recession and several rounds of economic activity freeze have hurt the economy. Consumers staying home and employers slashing jobs have removed prospects for recovery in the near future. Now, as several states and major cities are imposing mask mandates, restricting the size of gatherings, limiting restaurant dining operations, closing or reducing the hours and capacities of gyms, bars, stores, spas, and many others, business activity will be severely slumped one more time. And as a result, closures and bankruptcies will continue to impact the labor market. U.S. weekly jobless claims continue to head in the wrong direction, said analyst at the currency trading firm Owanda Edward Moya. The labor market outlook is bleak, as the winter wave of the virus is going to lead to more shutdowns. Even Fed Chair Jerome Powell has alerted that the next 3 to 6 months will likely be painful for the unemployed and particularly for small businesses. The truth is that the health crisis triggered an economic disaster that has been forming for years. During the first months of the crisis, business owners cut an amazing 22 million jobs due to the first lockdown blow in the economy. In these situations, we can see that our economic stability is based upon paycheck-to-paycheck employers and employees that are vulnerable to the slightest variations in the financial environment. At the peak of the crisis, our country's gross domestic product, which is the broadest measure of economic output, dropped a staggering 31.4%. The trillion-dollar federal relief package quickly lost its momentum as authorities failed to enact effective policies to control the contagion. The economic deterioration quickly spread in multiple sectors. From then on, the rate of job creation has steadily decreased. In June, 4.8 million jobs were added back. In July, roughly 1.8 million. 1.5 million in August, 711,000 in September, 610,000 in October, and 245,000 in November. Experts have been warning that if this pace continues to stall, it would take up to 4 years to regain the lost jobs. Can you even imagine what it's like to stay unemployed for 4 years? Especially in times when it has become quite evident that the government doesn't address the urgency of our problems and leaves us hanging for months. This is all due to some egotistical political impasse. It's undeniable that we're set up for failure, as everywhere we look there are signs of economic damage. Last Wednesday, the Commerce Department reported that retail sales declined 1.1% in November, which used to be the start of the all-important holiday shopping season. In the Black Friday month, we registered the biggest drop in retail sales in 7 months. Companies that were expecting to make up for this year's losses during the festive period may have found themselves in a much more worrying position. Nearly 60% of all U.S. small businesses are already on the brink of bankruptcy. And with new restrictions limiting their operations and consumers' access to their stores, how are they supposed to make enough revenue to step foot into 2021? Does this imply that soon we'll be seeing over 1 million Americans filing new weekly unemployment claims, like we did at the burst of the outbreak? It's not impossible nor improbable. Just think about it. Prior to 2020, the previous old-time record of weekly jobless claims dates back to 1982, when 695,000 benefit requests were registered. We have largely surpassed that record every single week throughout this crisis. We have been seeing numbers that we have never seen before in all of our nation's history. The new lockdowns are pushing these numbers up once again, according to data published by a daily news report. The number of unemployed people who are receiving aid from the Federal Extended Benefit Program, which offers coverage to gig workers and others who don't qualify for traditional benefits, surged to 9.2 million. Additionally, the number of people receiving aid under a second program, which provides 13 weeks of federal benefits to those who have exhausted their assistance, also increased to 4.8 million. Both of these programs and many others are scheduled to expire by year's end, leaving over 12 million jobless workers and their families without financial safety net to afford their expenses. Many may argue that the biggest share of job losses was driven by the downfall of small businesses, while large corporations are still thriving and leading our economy, which is partly true. The problem is major companies keep letting workers go at an outstanding pace. Yesterday, Coca-Cola announced plans to cut 2,200 jobs, which accounts for nearly 12% of their entire U.S. workforce, as it sees declining sales during the recession. The company reported that just at the headquarters of the company in Atlanta, 500 jobs are going to be eliminated. Coca-Cola wouldn't be cutting so many jobs if the U.S. economy was showing any signs of improvement. What this shows us is that these big corporations are massively laying off their staff because they can predict what is about to happen. So, they're trying to slim payrolls to survive the coming storm. Meanwhile, the debate regarding another stimulus package is getting heated among representatives and policymakers in Congress. Considering authorities are being forced to choose between unemployment benefits and $600 weekly stimulus checks, apparently the new $1 trillion relief bill is mostly going to support the financial markets while leaving the people fighting for the crumbs. Dealing with the current crisis by launching unprecedented amounts of printed money instead of re-strengthening our economy will only lead us to a different crisis. It might help in the short term, but it won't really solve anything, as our money supply has been increasing at an almost vertical rate this year. Hyperinflation is now on the horizon, and the effects of it can already be seen in food prices. What is even more aggravating is the fact that the U.S. is not alone in the money printing frenzy, and several other countries have been caught by the same trap and are now seeing prices soar. According to Zero Hedge, experts are panicking about surging food prices, and we should all be worried about the coming food inflation. The report explains that while overall inflation remains subdued, food inflation has been on a tear in recent months. The matter has gotten so concerning that at the beginning of the week, Goldman released a report looking at the recent spike in food inflation. The report observed that in recent months, inflation has risen, and surprisingly to the upside, across a number of emergent economies such as Turkey, South Africa, India, Brazil, and Russia. Along the same lines, SocGen's Albert Edwards has published outlining how the Fed's quantitative easing policies have impacted asset prices throughout the years. Aside from capital markets, where the Fed's intervention has spawned a record wealth divide leading to unprecedented political and social polarization. Perhaps the most disturbing episode of such distortion was the above-mentioned explosion of food prices that began towards the end of 2010. The report noted that this is particularly problematic because right now central banks are introducing a record $1.4 billion in liquidity every hour. And that's why Albert states that we should also watch the unfolding surge in food prices very closely. With trepidation, the expert discloses that the Fed's QE2 was the primary cause for the 2010 to 2011 bubble in food prices, which contributed to major social turbulence and collateral revolutions in many Arab countries. Albert says that even in the richest country in the world, food poverty has become a real problem during this crisis. In short, this means that we should all be carefully watching for mounting social agitation regarding access to food, as hungry, unemployed, and helpless Americans become increasingly desperate, and the cost of living continues to skyrocket sooner rather than later. Many that used to have a comfortable lifestyle will no longer be able to afford enough food. As economic collapse expert and author of Lost Prophecies of the Future of America, Michael Snyder has perfectly summarized in his latest article, once millions upon millions of Americans get desperately hungry, that is when we will absolutely see insane economic riots in this country. All of these things are coming, and we will definitely not have to wait very long. Meanwhile, in Washington, D.C., fat cat politicians who have not missed a single paycheck during this calamity continue to inject pork into stimulus that should be about the economy and saving suffering Americans. The latest bill, which may pass today, even has mention of the Dalai Lama. The bill is more than 5,000 pages long and will be brought to a vote before representatives can read it all. This in itself should be criminal, as the writers are asking other representatives to vote on something impossible to read in a short amount of time. Both sides of the aisle are responsible for this mess and should be taken to task in the next elections. While Americans and small businesses have been waiting for months for answers and help from Washington, Washington has managed to put together 5,000 plus pages of who knows what. It may or may not even be printed before they vote to approve it. Would you sign a contract before you read it? Folks, they're going to enact law before they read it in its entirety. Then, when there are sticky or unpopular points, they will say, we didn't have enough time to read it. This is how America gets into messes time and time again. Our politicians try to wrap a bunch of hidden nonsense into thousands of pages, hoping nobody will take the time to read it. That's all for now. Please remember to like, share, and subscribe. God bless America.